So, a quick daily brief for Monday, November 25th, 2013. We just had pending home sales come out. I just wanted to highlight this because I didn't catch it in Market Movers earlier this morning. The index just came out. It was actually the fifth month in a row of declines for pending home sales, and it's the lowest level we've been for this index since December, so almost a year ago. Pending home sales are basically where the contract's been signed, but it hasn't closed escrow yet. So the sale is pending, and that's why we call it pending home sales. Mainly the three areas that they're talking about as far as why the index has declined: mortgage rates increasing, the government shutdown, and which caused delays for IRS income verification and that type of thing, and rising prices, obviously. And weak inventories are another issue depending on which market you look at. It seems like across the U.S., low inventories are kind of a pretty universal issue, although there are some markets where that's obviously not going to be the case. As we always say, real estate's local, but we certainly have inventory issues here in our local market near the Santa Barbara area, where there just aren't that many homes for sale. And it depends on which area of the market you look at, the price point. So, for example, anything below $1 million right now, those homes tend to be moving very quickly if they do come on the market. The more high-priced homes, probably above $5 million, it's a different market, a different buyer, and those homes tend to stay on the market quite a bit longer. But especially the lower-priced homes, the low price for our market, tend to not be available, and when they do come on the market, they tend to move very quickly. We still have a lot of cash buyers out there. So again, that market is tough here locally, but those are the national numbers. Again, the worst number in 5 months in a row, and the worst number since December for pending home sales. So not great for people that own homes. If you're a seller out there, again, it just depends on what segment of the market you're in and what price you're looking for. Homes that are priced aggressively and that fall on the right price component, if you're a seller, you can usually move the home. Problem is, a lot of people are still either upside down on their house, or they may not be upside down as far as having negative equity, but they may not have enough equity where if they were to sell their current home, they would have the down payment money necessary to buy the next home. So you're sort of in a catch-22 situation there. If you need to get out, a lot of the people with the prices that rebounding who were down earlier may not be down anymore or upside down where they owe more than the home is worth. Maybe the home is now worth more than they owe. But again, the difference, the equity that they have in the home is not 20%, let's say, so they would have enough money to where they could take that 20% and then make a down payment to buy their next home, so they'd be forced to be renters after selling their home, and a lot of people obviously aren't comfortable with that idea. That is curtailing inventories, and it certainly puts people who are trying to sell in a tough spot. Prices have come back quite a bit, but they're not where they were back at the peak in 2007. Will they continue to go up in a rising interest rate environment? Hard to say. My personal opinion is no, they will not. I think if rates go up fairly aggressively from here, we're going to see prices come down again, but we'll have to wait and see.